Because another U.S. bank has collapsed. We're talking about the First Republic Bank.
That First Republic had collapsed on Monday, making it the third major U.S. bank to collapse.
Largest bank failure in U.S. history. Regulators have seized the bank.
The focus of the U.S. regional banking crisis turned on First Republic Bank in late March, after the wealthy clients it courted to fuel its breakneck growth began pulling their deposits. With no let-up in pressure on First Republic, the biggest U.S. bank, J.P. Morgan Chase & Co., said on Monday it will buy most of the San Francisco lender's assets after regulators seized the troubled lender over the weekend. The failure of First Republic, which said last week it had first-quarter outflows of more than $100 billion, marks the demise of a third major U.S. bank in just 2 months, after Silicon Valley Bank and Signature Bank. Here are some of the factors behind its fall. First Republic's business model was to lure high-net-worth customers with preferential rates on mortgages and loans. Its customers have included Instacart founder Apurva Mehta, investor Chamath Palihapitiya, and real estate developer Stephen M. Ross, according to bank promotional materials. First Republic also catered to other members of the community, according to bank materials which note that schools and nonprofits account for 22% of its business loans. First Republic said in January its shareholder returns were compounded at 19.5% annually, more than double its peers. However, its strategy made it more vulnerable than regional lenders with less affluent customers, since U.S. deposit insurance only guarantees $250,000 per savings account. First Republic had a high level of uninsured deposits. Meanwhile, its loan book and investment portfolio also became less valuable, as the U.S. Federal Reserve Bank raised interest rates, hampering its chances of a capital raise. How it unwound First Republic started amassing paper losses last year when the Fed began hiking U.S. interest rates to fight inflation. Gross unrealized losses in held-to-maturity investment portfolio, mainly government-backed debt, ballooned to $4.8 billion at the end of December from just $53 million a year earlier, according to First Republic's annual report. And by March, analysts and investors pegged its paper losses at between $9.4 billion and $13.5 billion. First Republic's annual report also warned investors that more than half its loan book was comprised of single-family residential mortgage. First Republic is officially no longer after the Federal Deposit Insurance Corporation announces the closure of the bank and the sale of most of its deposits and assets to J.P. Morgan Chase. J.P. Morgan CEO Jamie Dimon confirms to analysts his firm won't retain First Republic name and branding, writing the final chapter in the coffin for the bank's 38-year history. That's all for today's video. Thanks for watching. Make sure to subscribe to the channel and hit the bell icon for more amazing videos.